Welcome back to Good Morning Kenya. My name is Mike Migwan. We are glad that you're still watching KBC Channel 1. This is Good Morning Kenya. Now, let's talk about matters insurance because it's often viewed as an unnecessary expense until, something happens. It could be illness, it could be accident, it could be theft, anything. But having the right insurance policy helps you or cushions you from potentially devastating losses. And when we talk about insurance, we're talking about insurance, be it an individual, be it a family or a business. It's a very important aspect. So how do you choose the right insurance for yourself or your business or even your family in a landscape that is dynamic? And when I say landscape, it's the insurance dynamic landscape within the country. For that conversation, I am joined by Kalai Muse, who is Director of Supervision Insurance Regulatory Authority. Welcome to Good Morning Kenya.
Thank you, Mike.
How are you doing this morning?
Very well.
Yes. And this is a very pertinent issue that you are talking about when it comes to matters of insurance. Maybe to start off, why does it matter? Why does insurance matter?
Thank you, Mike. And thank you, Kenyans, for listening to me. Mm-hmm. Yes, insurance matters. It's very important for every aspect of our lives. Mm-hmm. And the reason for that is insurance deals with something we call risk.
Risk.
It is a way of managing risk. Mm-hmm. And risk is something which accompanies us in every aspect of our lives. And by risk, we basically mean the possibility of danger mm-hmm. or loss.
Yes.
Which is all over mm-hmm. in everything we do. Whether it is our normal lives, whether it is our business we are doing, mm-hmm. there is always a possibility that you can incur a loss which will cripple you financially.
Yes.
So that your economic status goes down. Mm-hmm. So risk, insurance is supposed to ensure that if the risk occurs, then your financial status mm-hmm. is maintained.
Nothing changes.
Nothing changes.
Everything goes normal.
Yes.
And the insurance takes care of everything else.
Exactly.
Now, there's the aspect of now choosing the right insurance, which is very important. Mm. How should one choose the right insurance policy?
The most important thing is to understand your exposure. Mm-hmm. What are the risks that you face? Once you understand the risks, then the next step will be for you to talk to an agent mm-hmm. or an insurance broker mm-hmm. or an insurance company.
Yes.
So that now they can tell you what products they have mm-hmm. which are relevant to your exposures. Because our exposures are not the same.
Yeah.
The risks I'm exposed to may not be the ones you're exposed to. Mm-hmm. So it's good to understand my exposure.
Yes.
Then I go to the professionals. I tell them I have this exposure. Mm-hmm. What do you have for me? And they will be able to get you something which is appropriate for you. Mm-hmm. Yes.
And this regard, whether you are taking it as an individual, a business, or even a family.
Exactly. Whichever has circumstances. Mm-hmm. Yes.
And, finance is one of the things that determine so many things. And when it comes to insurance, should one just choose a policy just because it's cheap?
Mike, that's a common mistake people make. Mm-hmm. I see many people saying that I'll go for the cheapest. Mm-hmm. That is not the right thing. The right thing is understand your exposure. You may get the cheapest, mm-hmm. then you find in the details of the policy, the other things you have not looked at. So it's good to understand exactly what is covered. Mm-hmm. Look at there are things we call terms and conditions of that policy. We will have excess, deductibles, mm-hmm. A lot of exclusions. Understand all those aspects because you may find the price is very low, but then there are so many exclusions. Mm-hmm. So it's a balance. Mm-hmm. Once you get the product,
yes.
read and understand what is covered, mm-hmm. and then you get the cheapest of what covers your exposure. Mm-hmm. Yes. And so it's not just the cheapest.
So actually one should ask themselves if the policy that they are getting is appropriate protection for their specific needs. regarding the kind of policy they take. And when you look at matters that regard insurance, there are some things called exclusions.
Yeah.
Talk about them and why they are important.
Yeah, that's important. You know, an insurance agreement is actually a contract between an insurance company and the person who is taking insurance. We call that person the insured.
Yes.
In that contract, everybody has a role to play.
Yes.
If it is the insurance company, there is what they are supposed to do, the promise they give.
Yes.
If it is the insured, there are things the insured must do. And that's why we call the terms and conditions.
Yes.
You are expected to do 1, 2, 3. Then the policy continues and says, for us to give you this cover, you meet these conditions, and the following will not be covered by that policy. And that's why those are what we call exclusions. Very important. So the company will tell you, we are covering you for this.
Yes.
But remember, we don't cover 1, 2, 3. And that is important because even the price, everything will be determined by those conditions. They are the ones which will determine.
Yes.
If there are no exclusions, probably you'll find that the price is very high. Exclusions may be put in there to reduce the price. If you say, I can't afford to pay 20,000 for that policy, then the insurance companies can then say, then we will not cover this thing, so that the premium can come back down to 10. So that's why it is very important. It determines what you will get if the loss occurs. So that's why the exclusion is important.
And actually, you can tailor them according to how you can afford.
Exactly. You can actually agree. Many people will go and say, no, I don't want that exclusion. Include the exclusion. Then the premium, of course, will go up slightly because of that. So you can negotiate with the insurance company. Yes.
Oh, that's very important to know, and a very important aspect to point out. And also, there are things called excesses in insurance.
Yes.
Talk about them.
Again, another misunderstood terminology in insurance. This is a technical term. People think that the insurance companies are charging the insured or the claimant a fee. It is not a fee. Excess is just a portion of the claim which is paid by the insured. You pay your own claim, a portion of your claim that you pay yourself. It's like you are self-insure yourself for a certain portion. The reason for this is to avoid the unnecessary expenses. For example, you incur a claim of 50 shillings. If you have insurance, you think that I need to go to an insurance company to claim 50 shillings. But the cost of the insurance company paying you 50 shillings may cost the insurance company 2,000. So the insurance company says, we don't want to entertain these frivolous amounts. You take care of them yourself. If there is that claim, pay yourself. But if the claim exceeds that amount, if it's 10,000, we say excess is 10,000.
Yes.
So if a claim exceeds 10,000, that is where the insurance company will come in. Anything below 10,000, please, it doesn't make sense to come to the insurance company to claim. So it's just for what we call, to make sure there is order, and discipline.
Yes.
Again, you will be careful not to incur those small claims.
Yes.
Yeah. Because you know you are going to pay yourself. So it also creates discipline.
Yes.
Yes.
Remember, you can be part of this conversation. You can send us your question via the SMS number 0707 303 212. 0707 303 212. You can send us your contribution via WhatsApp to this number, and we shall sample that at the tail end of this program. Now, looking at the landscape, insurance landscape within the country, you know, Kenya is one of the most has one of the most developed insurance markets in East Africa. But when you look at it again by the international standards, the penetration remains low. And approximately, this is data from the CBK, stands at 2.3 to 2.5% of GDP. Why do you think the uptick or the penetration remains relatively low?
Okay. let me start by just making a correction.
Yes.
The penetration at the moment is 2.63%. But I need to explain what penetration means. There is a difference between coverage and penetration. Coverage is the number of people who have insurance out of the total population.
Yes.
How many people have insurance? And currently it's something around 30% of the population. But penetration is the contribution to the national domestic product, GDP. And that can never be 100%.
Yeah.
So our aim is to move that penetration to GDP to around 5%. That's what we aim to.
Yes.
So it is said it's low in Kenya, but one of the best in Africa. But we have said we don't say it's where we need it to be, because the international average is about 7%. But we think if you reach at 5%, that
doing well.
we'll be doing very well. Yeah. So it's just the contribution to GDP, and it's an international metrics used to measure insurance development.
Could it also be about matters of perception? There's a perception that sometimes claims, the process of getting those claims is slow and fair regarding insurance.
To some extent, but I think the biggest problem is awareness. We think there is a big problem with awareness. A lot of people don't understand insurance. They don't understand the benefits of insurance, and that's why we are here.
Yes.
To make people understand that insurance is actually a necessity. People don't see it that way.
Yeah, they see it as an expense.
They see it as an expense. But as I said, it is what if something happens, you'll be pulled back to poverty within no time. So it's actually a necessity which people should plan for, so that their economic status is not affected by risks which occur. So awareness is a big issue, and as an authority we are doing that. We are going around educating the public on the importance of insurance, so that they can take it as they do business. There are a lot of people who are not investing because of the risks involved. They fear the risks, so they can't invest. But if they brought in insurance, then they will be comfortable and invest, knowing that if anything goes wrong in the investment, then the insurance company will come in and sort out the issue. Yes.
And also, that brings about a very important aspect. You look at financial literacy within the country. It's kind of remains a challenge because some consumers may struggle to understand complex financial products. What is the importance of financial literacy in making sure that there's an improvement in the insurance uptake?
It's very important. Financial literacy is a very important aspect. Actually, if you look at our budget, majority of our budgets, apart from the staff costs, the rest goes to literacy. And we've actually gone throughout the country. I don't think there is a count we have not gone to, just to teach people about insurance, so that they can understand the importance. So literacy is a big issue in the financial sector, and the government is actually putting a lot of effort in that area to ensure that people are aware, because that is the only way we are going to develop economically as a country. Otherwise there will be challenges.
And motor insurance is a compulsory necessity in Kenya, but you look at how motorists get these insurances. It's the minimum legal cover. Beyond complying with the law, what should vehicle owners know or consider when deciding between third-party and comprehensive insurance?
Yes, again, it's the same thing. Assess your risk. If you have bought a vehicle and you just go for third party because you fear the police will arrest you, you don't have that. What will happen if this vehicle, for example, is stolen? What will happen? Nothing will be paid. If it's involved in an accident that is a write-off, you will be returned to poverty. So it's an issue of assessing what are those risks that you are exposed to. What can make you go down financially? If you have that in mind, then you will not take that part only. Yeah.
And if anyone is taking their insurance for the first time, what are the things he or she should look out for? What would your advice be?
My advice would be, one, after you have assessed your needs, go to a broker or an insurance company for you to get an understanding of what products are available in the market. That broker or insurance company or agent that you go to, ensure they are authorized to do what they are doing. And you can do that by looking at their license issued by the IRA. They will have a license. In fact, they are all required to display. If you go to their office, you will find the license displayed there. Make sure the license is there. That is what means that they are authorized to do what they are doing. Then you can talk to them and see what they can offer. Yeah.
Have you come as an authority? Have you come across complaints from people about unscrupulous insurance brokers?
Yes, a lot.
How have you handled them?
Even insurance companies, there are people out there, and so there are some offices you go and you find somebody saying that I'm an insurance company, offering, I don't know, guarantees, insurance guarantees, and things like those. So that's why I'm saying, look at the license. Before you deal with anybody, make sure they are licensed. If they are not licensed, actually, you can report to us. We have a section which deals with that. Enforcement section deals with those people who are doing what they are not supposed to do. Yes.
All right, we are talking about choosing the right insurance policy with Kalai Muse from the Insurance Regulatory Authority. We are going to continue this conversation once we come back from this short break. Stay with us. Welcome back to Good Morning Kenya. We continue the conversation regarding matters of choosing the right insurance policy. Mr. Kalai, when you look at matters of insurance, and even when it comes to rebuilding consumer confidence and trust, because insurance is built on trust, and as we have said, sometimes some Kenyans may still associate it with delayed or disputed claims. From the complaints and oversight work undertaken by the authority, what can you say are the most common grievances that you have come across? And are there reforms that have been introduced to improve claims settlement and, by extension, rebuild this confidence that you're talking about?
Okay. Thank you, Mike. I think that one of the main issues is lack of understanding, like I said. You buy a policy and you actually don't know what is covered. So if there is a loss, you are then told, sorry, that was an exclusion.
Yes.
Then you, of course, you say, but I paid money all these years. You never told me. But you realize it is there in the policy document.
Yeah.
Probably you never read or you did not understand. And that's why I said it's very important to read that document so that you understand exactly what it is. We get a lot of those complaints. And normally what happens, if somebody is aggrieved, they come to us because we are able to look at all those documents and talk now to both sides. If you are the one who had not read, we will explain to you and tell you actually this is the position. But we've also done some exercise to try and improve these policy documents because insurance companies were blamed of being very legalistic. Documents which are not easily read. The exclusions are in a very small font, so you are not able to read. We standardized all that to remove all those issues so that people can easily understand their policy documents. So it's now upon the person who takes insurance to read. But if there are any grievances, if you are not sure of anything, you can come to IRA. We'll actually guide you on what to do.
Some feedback from the viewers. And Mike and Kalai, the show is very educative and eye-opening in terms of risk we are exposed to. He has a question. This is Chris Kalewa. He's asking, how do we have timelines for insurers to pay claims? How do we have timelines for insurers to pay claims?
Thank you. Actually, the timelines for payment of claims are stated in the law.
Yes.
The law says once a claim is lodged and all the information is provided,
yes,
the insurance company has a maximum of 90 days to pay that claim.
Yes.
Maximum
of 90 days.
Of 90 days. Whatever claim, maximum of 90 days. If they think they can't pay in 90 days,
yes,
then they are supposed to come to the Commission of Insurance, who can give them an extra 30 days or something. But the timelines are stated in the law. But if you go to most of the companies, their timelines are actually shorter. Many of them will say we should be able to pay in 14 days, and they do. They pay in 14 days. So the companies are left now to come up with their own standard operating procedures. Or now they can handle the claims which come to them.
Yes.
Because they don't have to wait for 90 days.
Yes.
90 days is just the maximum. Yes.
Another person is saying here, I paid for last expense cover for, okay, he's giving a name here, Bibiana Otiendo Okech through KCB intermediary to APA insurance company. The lady died in June this year, 9 days past the waiting period, provided required documents for claim payment, then came and gave actual documents that we sent. I even did statement saying they can pay the son, but initially they rejected my claim before they visited us. After the visit, they went mute. Nothing from their end, no reasons for declining the claim given. What can I do?
Please come to IRA. Come to IRA. If you gave everything at that, there's a requirement on how to handle clients.
Yes.
If there is a claim, you are supposed to tell the claimant, the insurance company now, tells the claimant, this is all we need. These are all the documents we need. So that now the claimant submits all those documents so that we can start counting the 90 days. If there is no response from the insurance company, even after submitting all the documents, come to IRA.
You'll be sorted.
We'll be sorted.
Another one. Hello, KBC. Thank you. We are learning. I'm Pamela. As an innovator, I'm interested in how technology is shaping the future of insurance. What innovative digital solutions are being introduced to attract young people and make insurance more accessible and appealing to them? Yes.
A very interesting point. You know, insurance industry has been accused of lagging behind in adoption of innovation. But things have changed now.
Yes.
A lot of these companies have systems which are end-to-end.
Yes.
Right from the marketing up to the time of a claim, where probably you don't need any paper involved in the process.
Yes.
Everything is digitized.
Yes.
We have a lot of what we call innovation hubs involving insurance companies.
Yes.
We have Bima labs for people to test their innovations. A lot of companies have even adopted AI, especially in underwriting and claims payment.
Yes.
So the industry is catching up.
The industry is catching up.
Catching up.
Of course, there's a lot to talk about, but I will give you a chance to give your closing remarks.
Okay.
Yes.
So my closing remark is one. Kenyans, we are all exposed to risks. Let us think of insurance as one of our methods of managing the risks we are exposed to, so that we can assist the government in ensuring there's economic development. Let's not just sit down because of fear of risk. We don't do anything. We don't invest. We need to assist the government in economic development by taking risk. And the only way you can take risk is by ensuring that insurance is there to support you in taking that risk.
A very important point to end. And thank you so much, Mr. Kalai Muse. Mr. Kalai Muse is the Director of Supervision at Insurance Regulatory Authority. This is where this conversation ends.